What income documents are required when assessing a low doc loan? That's a good question. So, a low doc loan, depending on which lender you go to, the banks will require either an accountant's letter that basically verifies your income, historical income. The bank will also, or could also require your last 2 or 4 BAS statements. And then what we basically do is we put that into what we call a BAS calculator, which spits out the income that you've expected to generate over the last 12 months. There's also things like self-declaration, where you can self-declare your income. That would also need to be supported by an accountant's declaration as well to verify that, in their opinion, you have the capacity to meet the repayments that for the loan that you're going for. One of the other things that the banks do consider is your last 6 or 12 business bank statements, just to verify the income going through to your account. So what the banks generally do with that information is they look at your turnover for the last, say, 12 months, and then they use the industry average profit margin based on that turnover, and they can apply a profit margin based on that. They will generally use the ATO guidelines in terms of what profit margins are for that specific industry. So they are the main source documents required when assessing a low doc loan. So just to recap, it's your BAS statements or an accountant's declaration or a self-declaration or even your bank statements. So every lender is different, so the requirements may be a little bit different. So generally it is one of those items will be sufficient, but yeah, it all depends on the lender.